would a tax hike for individuals and corporations impact economic growth? That is the question. Our panel of economic all-stars are here to discuss. We have Walser Wealth Management CEO Rebecca Walser, Wall Street Journal Global Economics Editor John Hilsenrath, and Brandywine Global Portfolio Manager Jack McIntyre. Thank you all. Rebecca, let me begin with you. And this issue of the individual tax hike, we don't know what it is. It's kind of a, it's not clear at all. Maybe it's families, the family threshold of 400,000 and above will get taxed. We're not being told what it will be for the individual. But regardless, what impact does that have overall? If you're earning 400,000 as a family in New York City, it still doesn't go that far as opposed to someone living in Nebraska.
Absolutely. Absolutely, Ashley. So we know that, tax policy, obviously, at the federal level impacts different people differently. So 400,000 might seem like a lot to a Southerner, but if you live in the city, or if you live in an urban area like Chicago, or if you're in California where they have a 13.3% top tax rate at that level of income, there's a lot of other factors that go into, and anytime we have tax policy increases, we always see economic retraction. And it's a problem, and it's a little surprising that they would really come out of the gate. I guess it's not, because they have both sides of the House and the Senate, right? But still, I'm still a little surprised in this global pandemic and the economic weakness that we've had since it, that they would be talking tax hikes right now.
Yeah, John, to that point, listen, we're just emerging, trying to get our economy reopened to a sustainable level, and then whammo, we could be hit with these taxes, both for the individual and for corporations. Seems like the timing is terrible.
It's certainly a little unusual. In terms of 2021, I think the economic outlook is kind of baked in the cake. There's so much money sitting on the sidelines, in part because of those rebates that just went out. Households are flush with cash. They paid down debt last year. Saving was at record levels. I think we're primed for a boom this summer. The real question is, when they fiddle with tax rates, is that going to affect the long-run growth rate? I think a lot's going to depend on what happens on the corporate level. Frankly, in terms of the high-end rate, the high-end rate has been going between 35% and 40% since the early 1990s. The big moves on high-end taxes happened in the 60s with Kennedy and in the 80s with Reagan. There haven't been really big changes since then, and I doubt there are going to be big changes now.
That's probably true. Let me bring in Jack, if I can. Jack, I want to carry on with the corporate side of this, the corporate tax rate proposed from 21 to 28%. I mean, ultimately, I think that would force companies to perhaps cut corners more, be less reliant, less likely to hire people. They could turn around and reduce dividends, so shareholders get hurt. I mean, this is far more ranging than putting it to, the fat cat corporations. This can have a significant ripple effect.
Sure, Ashley. I agree. What seems like on the surface a simple solution has some bigger negative impacts. Remember, you see companies, and we're talking large corporations, small businesses, the cost of doing business is increasing. What their input costs are rising. What we're starting to see now is them to pass on, but if they can't pass on those higher prices, then their margins are going to get squeezed, and then layer on top of that just higher taxes, and there's going to be some negative consequences. I mean, you're going to have to see the PE multiples for the public companies maybe get adjusted lower. So it's not going to be good for the overall equity market.
Coming back to Rebecca. Rebecca, it's interesting. These are just proposals. They haven't gone through. It may be a struggle for them to get it through to become law. That is for sure. If it doesn't happen and we carry on as we are for now, how quickly can we get even close to where we were under President Trump prior to the COVID outbreak?
Well, that's not going to happen, in my opinion, Ashley, because this administration is just not President Trump's administration, and they are economically, on energy and on other policies and other sectors, a lot more aggressive and restrictive. And so we're talking about regulation coming back, energy policy. We're already looking at not being energy independent anymore. And so I don't see us with not having our energy independence and having regulation added back to different sectors at the level and rate that this administration is writing executive orders. I don't see us having a Trump economy under a Biden administration.
John, certainly the Fed is still very dovish. And interesting, 11 days from expiring, they're going to say no to the banks. You can't have that exemption anymore. You're going to have to keep more capital on hand. I thought that was interesting, but does it signal perhaps, and I asked someone else this earlier, that the Fed are more confident in the economy and now therefore are taking away some of these exemptions?
Right, on this bank rule that you mentioned, the Fed was giving the banks some leeway to hold more treasuries in their portfolios, and now they're dialing that back a little bit, and that's pushing long-term interest rates up. I think there's always an impulse in the Fed to try to get back to normal in terms of what the regulatory environment was and in terms of what interest rates were. In terms of interest rates, they're promising that they're going to keep them very low for the next couple of years. And I think the thing that we all need to be talking about, like the real risk on the horizon that we need to be concerned about, is what's going to happen with inflation. We're talking about growth. We're talking about unemployment. What is the risk that when I go out to buy my plane ticket in a couple of months, when things get back to normal, after we bailed out these airlines, that they're going to jack up the price on me? And that it's just not going to be affordable to do all the traveling and getting back to life as we knew it. I think the price story is going to be a big story in 2021.
I agree. Very quickly, Jack, your comments on that. Already we know gas is a lot more expensive, but I hear a lot more people complaining about going to the supermarket and how much more they're paying, and that could really crimp the economy if people can't afford it.
You're absolutely right. That $400 fiscal stimulus check is going to be eaten up by higher gasoline prices, higher food prices, as you mentioned as well. So it's not going to have the positive impact that on the underlying economy that the market might think it will.
All right, we'll have to leave it there. Rebecca, John, Jack, thank you all for joining us today. We do appreciate it.